Singapore's overall manufacturing output dipped 2.5% on-year in December, compared with zero growth in November. Now, the drag was mainly due to the biomedical manufacturing sector, but there were some bright spots, especially in electronics. Nadirah Zaidi finds out what drove the push.
The performance for most clusters fell, but not for the electronics sector. It grew 6.3% on-year in December compared to about 5% in November. The demand for smartphones propelled the semiconductor segment, which expanded nearly 20% on-year. It was stronger than previous months' expansion of about 6%.
During the COVID-19 pandemic in 2020 and 2021, there were a lot of spending on some of these items as companies and individuals adapted to the work from home arrangements. And perhaps at this stage, we are close to the end of the life cycle for some of these products. So perhaps some replacement demand for these items.
Market watchers are optimistic about a gradual recovery in global electronic sales, but its growth is not a given.
It still depends on the global economic environment and demand conditions, which that is improving. And we also see electronics PMI expanding for the second straight month. Longer term, I think global semiconductor companies continue to see Singapore as an attractive investment destination, given its still good business environment as well as highly skilled talent.
At the other end of the spectrum, the biomedical sector declined sharply at close to 24% compared to November's slide of 3%. The drop is mainly due to pharmaceuticals. Some analysts say it was due to softer demand. Looking ahead, they are confident of a gradual recovery in the overall manufacturing output this year.
There'll be more spending on manufactured products compared to services. I think after spending a lot on holidays and other hotels, restaurants, I think now I believe that there's some indications showing that the spending is back towards goods once again. I think if you look at some of the global manufacturing PMIs, they are starting to see some resilience.
Analysts also pointed out potential risks. These include geopolitical tensions that could disrupt the supply chain, high interest rates in advanced economies, and China's economic performance could also impact manufacturing output.